Hey guys, it's May 2nd, 2020, Saturday, 12:35 p.m. I want to talk about the stock market coming into next week, what people are expecting, what the technicals showed us. I'm going to kind of give you guys a different opinion, as I usually do, a little bit outside the box and what I'm expecting. I guess the first thing to say is, has this market been easily predictable? Has it fooled a lot of people? Yes. Is there any reason to think that it won't continue to do that? Absolutely not. So we're going to focus on the S&P 500. I'm going to show you some charts of some individual stocks. We'll look at the VIX, and I'm going to show you a couple other things too that are probably things that nobody else is talking about right now, and some things of interest. So the first thing we look at here is the S&P 500. I'm doing a custom Fibonacci retracement, not from the top of the market, but based on the first bounce area. I use both of these areas. I actually use the first downdraft candle on this inverted hammer, and I'm using the first bounce area to kind of figure out some energy levels. I'm also pulling out the tail of that bear trap reversal, and I'm kind of going from some common touches along here to kind of gauge where we're at. And if we look at this Fibonacci, you can see it captures some pretty interesting areas here. Little bounces, tails, a few touches along here, a bounce off the bottom here, and then this final retest of the 248 area before firing back up, a bounce back to the 271.12. It wanted to go higher, so nobody wanted to wait for 271.12. Instead, they came in at 272.02 on this candle, pushed it higher. We got up to the 295.55 area in aftermarket. We pulled back, and we literally closed pretty much a little bit ahead of that 281.20. So given that Fibonacci, we could say that Monday morning there's actually a potential that we literally bounce. And I think the thing that a lot of people are missing is that if you looked at the trajectory of the sell-off in the market and the bounce, they're not commensurate. Actually, if you look at it from that perspective, it looks like a pretty intense angle to a bounce. But in reality, we're kind of going in a little bit more of a sideways pattern. So there's two channels that I want to look at and make a few comments. If we look at the shorter term moving average crossing above the intermediate term average, this is a 20 SMA crossing decisively above a 50 SMA. And we look back on the history of the SPY, usually when that happens, pretty good things usually coincide moving forward. In fact, unless they cross back over to the opposite direction, we usually see a continuation move in that direction to the upside. So if we can kind of pull back here and look at different time frames, we obviously have the 20, or I'm using a 19 to shorten because of this market. We have the 19 crossing over. We have good things happen. We have a crossover here, obviously the pullback, but if you got back in during this crossover, you caught this nice move here. Imagine this is 2 months, so once again a crossover with a little dip correction. And then here's the big one. You have the crossover here and you have a touch. You don't have a crossover. And they widen and remain in that same trajectory, and you catch a massive move from 294 up to the 339 high. So now we have a crossover to the downside, which if you were participating in the market, which I wasn't at the time, I was already in cash, you would have been out waiting for this expansion to narrow, which we have done here in quite an intense manner, and we have a crossover. So that's, for starters, a very high angle crossover, something similar, not even like this. It's almost the inverted version of this. So that's a number one positive too. So, and I'm going to show you some other positives as well. So we have the crossover. If we look from a channel perspective, usually markets have a directional change when a channel narrows, and we can kind of look at it like this. And we're going from closes. I don't really care about tails and wicks, but we'll call this, since that's the close and that's the close in this area, we'll call this the downward channel with a very sharp starting trajectory, with the velocity of the initial sell-off is very intense. The first bounce was very intense too, obviously. Drop a basketball from a roof and it's going to bounce hard the first time, then it'll start to bounce a little bit less on the way down. So we have the narrowing channel. We have the little bear trap, which sucked in all the bears once we broke this little lower level. And then we fire up, and the tail is right on the top of the resistance channel now, which becomes support. So we get this big bounce, we kind of pull back, which everybody expected this pullback to probably result in another leg down with a crash, but it didn't. Once again, fakes out all the participants, which the market's great at doing, and then you have another move to the upside, and we're starting to create a channel. So this channel would look something like this. And we would say that we haven't reached the bottom of that channel. So if we want to edit this so we can kind of get a good look at what we're looking at, we'll change that to white. And if we wanted to duplicate this channel to the top, it would look something like this. Once again, common touches. We don't care about opens above certain levels per se, because that usually means that if we stretch above a certain area, we're going to snap back into another area. Just as if you pull back a tail through a certain channel line, the energy tends to go back the other way pretty strongly. So this is our channel. So now what do we see happening? We see a failure to reach the top of the channel, which is understandable. We've had a hell of a move from here, correct? So most likely the scenario is that most people think we're going to go back down and break this channel and start this big downward fall here, breaking and retesting lows and breaking it. Has anything changed in the market psychology since this area here? Not really. Is the economy recovering quickly? Absolutely not. In fact, it's probably going to be getting a little bit worse here in the near term. So we keep an open mind that if the scenario is going to play out where the economy is actually going to come into forefront here and we're going to start to break down based on hope versus reality, we're going to start to see some of these channels break with intensity. And I'll show you some things in some later videos that we're going to look for. But in actuality too, the trajectory has just changed here, that the economy is on a path of most likely a slower recovery, and you're going to see a little bit more of a sideways trajectory in the market. If we look at the channel here and look at the channel on the bottom, we're going to change the color and we'll call this the sideways pattern, which is what we're seeing now. This is a scenario that I probably would follow at this time, and I think it's the most likely scenario until further evidence tells me otherwise. I'm sorry. So actually, why didn't that not stay like that? Apologies for that. I don't know why I did that, and it's probably not going to change anyway. So you get the idea. We have a nice little channel here on a sideways pattern. Coincidentally, it also lines up with what would be Monday, a test of the upward trajectory channel. So a lot of things are happening on Monday in the 278 area, which is actually 278.90 if you want to be exact. I would love to see a gap down to 278.90 in the open, because I would buy the hell out of it with some stops intraday for a continuation move past that point. So in my opinion, we've just simply changed from a high trajectory channel to a sideways channel. It's kind of a waiting period to see how things pan out. We could put a tail through the shorter term moving average, not a problem. As long as we hold above the 50, I think things will continue, and that 50 will start to curve as well, which will give us support along the channel line further down the road. Another thing I want to look at too, and we're going to clear this drawing set to kind of show you, and then we'll talk about some other things as well. Actually, let's clear the drawing set first. And another thing that no one's really talking about, let's look at the McClellan Oscillator. The McClellan Oscillator is the volume. It's a weighting of the advancing issues versus declining issues on the New York Stock Exchange. Once again, we have a perfect scenario, and actually, before I get into that, you can see that this bounce was followed up by a further bounce with a higher high on the oscillator. This last bounce was weaker, yet we had higher prices. A little bit of a red flag that this bounce here would not last. But that being said, we're still holding a trajectory here. If this was the break of the line in here, then we have sort of a pattern forming across the bottom here, which once again would line up with a pullback into the lower channel area. It would also line up with the oscillator. So as long as we don't have a break of the 30, I guess you'd say 30, I don't know, 31, 32 area, we'll be able to see it cleanly. We're going to just continue to have a little bit of sideways action. Another interesting thing to note is if we look at the same price point at the 284 area, or even the close around 282.70, and we cross over here and look at a closing area of around 282.70, or at least an intraday area, and we scroll down, the oscillator is definitely pinned in the negative side. which tells us even though the price structure is the same here, obviously around between 280 and 287, the oscillator is showing massive weakness with advanced declining lines versus up here, which were in the positive and still holding a very higher level of advanced decline. So that's for starters. Now let's look at the VIX and see, was this a big panic sell-off on Friday, or was just some cycling through? Absolutely, so far it looks like just some simple cycling through my Fibonacci fans that I made on the VIX. We went up and touched this trajectory line at the top wick and we pulled back. In fact, the line was drawn because this was the closing price channel line bull path move of the VIX. Forget about this because we're worried about closes. The close was up here. Here's the close, here's the tail. This line was broken in this area. If we continued up, it would have bounced right in this area here at 64. We put tails through, that's fine. Its closes is what I'm more apt to look at. That channel line break coincides with this wick here and this wick here. So once again, show me a close above 39, 38.90, somewhere like that on Monday, and I'll start to pay attention. Let's look at the IWM. Huge move last week, very strong, outdoing all the other indices. Look at this sharp move to the upside. Can we expect a pullback? Absolutely. Did we close above the 50-day moving average? Absolutely. Not only did we close above that, but when I run my Fibonacci from the bounce area, not the top of the market with this static bull crap up here, what did we do? We just simply got overextended into the channel, right? And what happens when we get overextended in a channel? We usually get a snapback. But we're holding my double touch Fibonacci at 124.82. Break below that, and then on a close, and then I'll start to pay attention. Other than that, we're just going sideways, and maybe curling into a different trajectory on the market. Same thing, just got overbought, pulling back. We'll let the evidence show us anything else to the alternative, and then we can go put our shorts on. By the way, I came in short the market. I shorted it at 294 on Fed day. I covered some intraday. I brought some in and covered it in the market. I was short the Qs coming in. I'm doing it all the time. Same scenario. Once again, nice little pattern along here, right? Where are we going to bounce at? Most likely along there. If we push through there, then we'll adjust our game plan. But so far, nothing new here. Can we pull down and put a tail on the 19-day moving average I'm using? Absolutely. Would we have a massive sell-off with stocks like Wayfair? And I'm just going to pick on Wayfair, and then this weekend we're going to go into ripping on some other people's technical analysis for some fun. This is Wayfair. Look at the move this thing's had. From 21 to 136. Is this the kind of pullback you get if we think the market's going to collapse in a stock like Wayfair? I mean, seriously, and what did it do? It closed above its opening. I don't think so. These aren't, at this point, these are not indications of a big market sell-off next week. Let's look at the XLF, which is completely sucked. Can't get out of its own way. A little bit of a close right on the trend line, maybe slightly penetrating it, right? Nothing crazy yet. Kind of holding a little bit below my 19-day moving average. This one's already started a sideways pattern. Talk about weak. This thing hasn't participated at all in the last few days. I'd probably look for a transition change. Let's see, somewhere on this bounce line, right? Because that kind of pulled back, and then so maybe we have some type of a channel like this forming, and maybe we'll get a little bit of a bounce and then a break to the upside. Keeping an open mind is all I'm saying, guys. Keeping an open mind. We could even cross over here on this support level that we broke to the upside, which gave us this move. So maybe we have some more wiggle room on the sideways on the XLF without getting all panicky. So far, nothing extremely concerning for next week. We'll put out some numbers. We'll talk some BS on some videos that other guys have in their technicals, and we'll look at some of the news. But so far, McClellan Oscillator is my indicator. Channel lines are my indicator. Nothing to be freaked out about just yet. In fact, I'd say there's a 70% chance that we actually come out strong in the morning. I'm actually hoping for a pullback gap down to kind of relieve the overhead. Don't even let the sellers get a chance to come in, and nothing but buyers in the morning. Give me a little gap down to 280 area, and the market runs from there to the upside. A lot of people are telling you, well, this could happen, but that could happen. I'm telling you, if that happens, that's what I'm doing.